Tax clients that are now drawing Social Security benefits, there's two things they need to be aware of, and a lot of times people get these confused. One area is not something that your tax professional is going to, they can advise you of it, but they don't calculate this. You have to do this through Social Security Administration. But it's how much money you can earn and still get your maximum benefits. If you earn too much money, then your benefits are going to be reduced, and they're going to be reduced until, I believe, your benefits reach a minimum amount. That, unfortunately, I don't have a lot of information on. You'd have to go to your local Social Security Administration. Now, the other side of it is, are your benefits taxable or not? And the answer is sometimes, and up to a maximum 85% of your benefits are taxable. It depends on whether you're married filing jointly, married filing separately, or single, and how much money you and your spouse make, or just you if you're single. There's a formula that we can calculate how much of your benefits will be taxable up to the maximum amount that's allowed under IRS law, which is 85% of your benefits could be taxable. Now, if you're in the state of Oregon, Oregon does allow that none of your Social Security benefits would be taxable. So this would be only an IRS issue for those people that are in the state of Oregon. When you're notified by Social Security Administration that now you've reached a certain age and you can make as much money and your benefits will not be reduced because of working too much, that does not mean that those benefits still might not be taxable. It still comes down to how much your total income on your return is and whether you're going to be taxed on your benefits or not. So you have to look at your income on the return to figure out exactly when you're going to be taxed on your Social Security benefits. But generally speaking, once your income level is $30,000 to $35,000, you're going to start seeing some of your Social Security start to be taxable. And I would say once your income gets over the $50,000 to $60,000 threshold, you're going to be at the maximum of 85%. So not only do you have this additional income that may be having taxes withheld, it may be retirement distributions, it could be wage income, or just investment income, interest off your savings. That income may be taxed, but now that you have this other income from Social Security being taxed, when it piggybacks on top of the other income, you most likely are going to owe with your taxes unless you're making estimate payments or having the other income taxed harder. Or you can also elect to have voluntary tax payments withheld out of your Social Security benefits.